Hi, I'm Carly Zakin, co-founder and co-CEO of The Skim. Danielle, our other co-founder and co-CEO, is taking this semester off while she's out on paid family leave. But from the both of us, welcome back to class. Meet SkimmU Money, a series of courses to help you start investing and build long-term wealth. It feels like every time we check our phones, crypto and its unpredictable future are in the news. So the Skim has stepped up to keep you informed on the future of money through our content, our newsletters, and events. From coins to NFTs, there is a lot to consider when it comes to alternative investments in the crypto space. But if you're feeling FOMO or overwhelmed, just remember, crypto is not right for everyone. Maggie Love is the founder of SheFi. She'll explain how to decide if putting money into the volatile crypto market is a strategy that's right for you and your portfolio. Class is in session.
Hi, everyone, and welcome back to SkimmU Money. I'm Alex Carr, the senior producer and host of the Skim This podcast, and I'll be moderating our conversation tonight, presented by Fidelity. We're wrapping up our semester with a conversation about cryptocurrency. Here to help us understand the ins and outs of crypto is Maggie Love, the founder of SheFi, a company that empowers women and non-binary people through crypto education, investing, and community. After Maggie finishes her presentation, we'll welcome Charlene Fadirepo, a former U.S. federal regulator, Bitcoin advisor, and the founder of Guidefi, to the conversation. We'll end the night with audience Q&A, and you can submit a question for Maggie or Charlene anytime using the tool on the side of your screen. And tomorrow, you'll receive an email with a link to this session, so you can rewatch it, bookmark it, or share it with a friend. So let's go ahead and bring Maggie on to get started. Maggie, welcome to SkimmU. Thank you for being here.
Thanks for having me. Hello, Skim community. I'm so excited to be here today to get rid of any FOMO you may have around crypto investing. My name is Maggie Love. I've been in the crypto space since 2017, and I am the founder of SheFi. SheFi empowers women and non-binary folks to unlock financial freedom through crypto education, experimentation, investing in a global community. To date, I've onboarded over 1,000 people to the crypto and Web3 space through the SheFi program. I've also taught my courses at places like Oxford University and Google. Once again, I'm so thrilled to be here. I remember when the Skim first landed in my inbox in 2013, and I can't believe I'm here today talking about something I'm very passionate about to this incredible community. Just a reminder to follow your curiosities, passions, and dreams. You never know where they may land you. Let's dive in. What we'll cover today: what crypto is and the many terms related to it, the risks involved with digital assets, how to buy or invest in crypto assets, how to store your digital assets, and finally, and most importantly, how to determine if crypto investing is right for you. So it seems like everyone and their mother is talking about crypto. Square buys a large position of Bitcoin. Beeple, an artist, sells a non-fungible token, or NFT, for $69 million. PayPal launches a super app that includes crypto. Reese Witherspoon, Eva Longoria, Shakira, Tom Brady, and Snoop Dogg are just a few of the major celebs getting into crypto. And finally, decentralized autonomous organizations, DAOs, which are crypto organizations, are being written about in dance music magazines. Over the past year or so, crypto has gone from niche to mainstream. Okay, so everyone's talking about crypto, but what is it? Crypto is a form of digital money or assets. It's also a form of digital ownership. Crypto is managed on blockchain technology that uses cryptography, math, to verify crypto transactions. And because crypto exists on blockchains, it is decentralized and global. A main reason why you shouldn't have FOMO is crypto investing is still relatively new. Bitcoin, the first cryptocurrency, what I like to call the matriarch of crypto, was created in 2009, only 13 years ago. Therefore, there's not much precedent for how it reacts to markets or world events. For example, this past year, the war in Ukraine has had a big impact on crypto prices, as well as almost everything that's had an impact on the traditional stock market, such as surging inflation and rising interest rates. No single government or corporation controls crypto assets. Therefore, it's not currently regulated in the same way as the stock market. And to be honest, there's still a lot of uncertainty for how crypto will be regulated. Also, there's few protections for investors against fraudulent coins or scams in the crypto space. All of this means there's more risk and responsibility placed on crypto investors. This is something I'll be repeating a few times today. Crypto is an alternative investment vehicle. This means it exists outside of the traditional capital markets, such as the New York Stock Exchange or the NASDAQ. Crypto is more commonly found on crypto exchanges and platforms. Some of the major crypto exchanges are Coinbase, Gemini, FTX, and Binance. Anyone can invest in crypto assets, which I think is very cool. However, anyone, yes, anyone, can start a crypto project and launch a crypto asset without going through the same rigorous processes a company has to go through to list a stock. Therefore, crypto investors must have rigorous due diligence when they're examining crypto investments. A big thing to know is crypto is highly volatile. Volatility measures how frequently and the magnitude of an asset's price swings. Crypto and digital assets fluctuate in price upward and downward quite often. I mean, look at this chart. This is the Bitcoin chart. Last November, Bitcoin was trading at $68,000 per coin, and everyone felt really smart. This past June, Bitcoin was trading below $20,000. People were not feeling so smart. Why is crypto so volatile? Well, it's an emerging asset class with legal, political, institutional, and technological uncertainty. Also, as I mentioned before, several macroeconomic factors, such as surging inflation, global crises, and interest rate hikes are driving short-term volatility. If price swings are not something you can stomach or are comfortable with, crypto might not be the best investment vehicle for you. With investing in crypto, it does not rely on trusted parties to manage or hold assets. Investors and users are strongly encouraged to secure their own funds, which they can do by downloading a crypto software wallet or buying a crypto hardware wallet. More on this later. By not securing your own assets and leaving them on exchanges, you put your crypto at risk if something happens to the platform from a liquidity crisis, a hack, or some other unforeseen event. Please note, the major exchanges, Coinbase, Gemini, FTX, and Binance, are well capitalized and regulated by governance, so this does not apply to them. I am not trying to scare you with my disclaimers, my mentions of responsibilities and risks. I'm just trying to make you aware of the realities of crypto. Crypto is a new frontier of finance in the internet, which excites me and many entrepreneurs in the crypto space. If you have a lower risk tolerance, it might not be the way to diversify your portfolio. If you're in the position to take on some risk, it could be worth considering. There is more than one way to invest in crypto. You can invest in cryptocurrencies, which there are hundreds of thousands of, such as Bitcoin, Dogecoin, Ethereum, Solana, Cosmos, Polkadot, and the list goes on. Cryptocurrencies represent blockchain technologies or projects. For example, Bitcoin represents the Bitcoin blockchain, a decentralized peer-to-peer money network. Ethereum represents the Ethereum blockchain, a technology that any application can be built on top of to operate in a peer-to-peer fashion, such as finance, gaming, and the metaverse. Solana represents the Solana blockchain, which has a similar mission and use as Ethereum does. You can also invest in non-fungible tokens, or NFTs. Non-fungible tokens are unique digital assets with provable ownership as they're issued on blockchains. Each individual NFT is one of a kind, just like each individual diamond is one of a kind. NFTs span many use cases: art, music, content, gaming, digital fashion, metaverse real estate, and even represent physical assets. Pick a use case you're interested in and start learning more. If you'd like to stick to a more traditional investment vehicle, you can purchase Bitcoin or crypto ETFs that track cryptocurrencies, assets, and companies. If you're ready to get started investing in crypto, the first step is to start learning, which you're doing a great job of by being here today. Pick a few crypto assets you're interested in and go deeper. Get to know how that asset operates. A few things to examine are: what is the blockchain project or technology it represents? What is the long-term roadmap and vision of that project? Do you believe in it? What is the demand for that crypto asset? Also, get to know the team and the community around it. Reminder, make sure volatility is something that you are comfortable with. Define your strategy. Are you in it for the short term or the longer term? If you're in it for the longer term, short-term volatility won't bother you as much. If you're ready to buy your first crypto, it's time to open an account at a crypto exchange. Where you buy and store your crypto matters. Do your research on the crypto exchange of your choice. As I mentioned, some major exchanges are Coinbase, Gemini, Binance, and FTX. Get to know how your money is stored on that platform and what their security practices are. Find out how financially stable the exchange is and how well capitalized or how much liquidity the platform has. The more capital the platform has, the more financially stable it is. After you've bought your first crypto, it's time to store your crypto. There are custody solutions and self-custody solutions. Custody solutions mean that third parties manage the wallet that holds your digital assets. All exchanges provide this for their customers. It's a great way to get started with storing your crypto, to leave it on an exchange, and especially if you only have a small amount of crypto. Self-custody solutions mean you manage the wallet that holds your assets. There are hot storage wallets and cold storage wallets, and no, that has nothing to do with temperature. Hot storage wallets are software wallets or online wallets. They're connected to the internet, so they're easy to download and easy to start using when you want to transfer crypto, but they're less secure. Cold storage wallets or hardware wallets look like USBs and are physical devices. They're offline, so it's not as convenient to trade or transfer crypto, but they are far more secure. There are two major cold storage brands, Ledger and Trezor. You should only buy cold storage wallets from the vendor's website. Never buy them from a third-party reseller, as they may be tampered with. So please, this is the one thing I beg you not to buy on Amazon. Once you've bought some crypto, you're storing it yourself or on an exchange, it's time to level up your crypto investing. Consider setting up recurring buys to build your portfolio. Similar to dollar cost averaging, pick the amount that you want to buy, break it into smaller chunks, and invest it over time. You can also stake your crypto to earn more crypto on your crypto. Think of this as a high-yield savings account for your crypto. And finally, you can start buying NFTs. As I mentioned, there's many use cases: art, music, collectibles, digital fashion. Pick the use case that you're most interested in, dive deeper, and start building up a portfolio in that use case. Time for everybody's favorite subject, taxes. Crypto and taxes. Crypto is taxed like other investments, similar to stocks. When you sell crypto for currency, make a swap from one currency to another, or buy an NFT, you'll owe taxes on any gains. I am not a tax advisor. Pro tip, please consult a tax advisor. Also, as always, keep all the records of selling your crypto. You'll need them when tax season comes around. Before you start dabbling in crypto, make sure your personal finance checklist is in good shape. Pay off any debt, set a budget, invest in an emergency fund and a retirement account before you start setting a budget for crypto. Have your full emergency fund. Crypto is highly volatile, as I mentioned, so I would not put crypto in that. Also, always take care of your future you first. Invest in your retirement accounts before investing in crypto. Some final crypto investing tips. Decide if crypto investing is right for you. I hope I at least sparked some curiosity tonight. Start small and set a budget. You never invest more than you can lose, no matter what type of investment it is. Determine your risk tolerance. Once again, what are you comfortable losing? What type of volatility are you comfortable with? Do your research. Know what cryptocurrencies you're investing in. Know the blockchain projects they represent. Know what use cases they go after. Really start to understand the space before you make your first investment. And once again, start with an area you're interested in. Almost every application and use case exists in the crypto space. DeFi or decentralized finance, NFTs, non-fungible tokens, or Bitcoin. Go deep on that use case and start investing there. Thank you so much for having me and learning a bit more about crypto. I would love to keep in touch. You can follow me on Twitter or SheFi on Twitter. SheFi is she__fi. That was the only SheFi Twitter handle out there. Or Maggie Love, Maggie Love_. Instagram, shefi.crypto or love.maggie_. And you can find me on LinkedIn at Maggie Love. Also, you can learn more about the SheFi program at www.shefi.org. You can also apply to be in our next cohort where you can learn everything about Web3, crypto, DeFi, NFTs, and DAOs. If none of those words made sense to you, you're the perfect candidate for this course. Thank you.
Thank you so much, Maggie. Some of those words did not make sense to me, so I'll have follow-up questions for you. I feel like I need a dictionary sometimes for crypto. I want to go ahead and bring on Charlene, a Bitcoin advisor, to join the conversation. And remember, we'll wrap up tonight's event with an audience Q&A. So if you have a question at any time, you can submit them using the tool on the side of your screen.
What's your ghost? The ghost of you, it keeps me awake. My friends had you figured out. Yeah, there's so much inside of you. You tried hiding another you, but your evil was coming through. And these guys sitting on the wall, well, they watch every move I make. Bright light living in the shade. Your cold heart makes the spirit shake.
Charlene, welcome. Thank you for joining us.
Thank you so much for having me. Welcome. Hello to the SkimmU community. I'm Charlene Fadirepo. I'm a Bitcoin advisor, a former U.S. regulator, and the founder of a company called Guidefi. We help women of color get smart and build wealth through Bitcoin. I also run a company called Mango Digital Strategies, where we help institutions future-proof their strategies through Bitcoin and crypto. I'm super excited to be here today and excited about this conversation.
Awesome. Well, I'm excited to get into it. I have a ton of questions. Maggie, we heard the word volatile a lot in your presentation. And I want to understand the difference between volatility, let's say, in the stock market and volatility in the crypto market. Because I think we're all aware that the stock market goes up and down. But how is that different than what we see in the crypto market?
Sure. So the crypto market is an emerging market. So it's not as well capitalized, doesn't have as much liquidity as the stock market. So that's why sometimes the prices are way more volatile than what we see in the stock market. Also, since crypto is an emerging asset class and something you invest in after you invest in the stock market, when we see surging inflation or rising interest rates and people start taking their money out of investments, they're going to leave the crypto market first, the riskier investments, the emerging assets, and then leave the stock market second. So that is why we see many times that the crypto market can be way more volatile. Also, crypto does not have as much institutional adoption from major banks as stocks in the stock market do. So because we have less adoption, that causes larger price movements when things are sold. So it's a mix of it being an emerging asset class. People will leave that first when the macroeconomic factors are changing, and also we don't have as much adoption in institutions and liquidity in those markets. So even a smaller sale of Bitcoin will a much larger price swing than the same level of a sell in the stock market.
Can I just add a little?
Yeah.
I mean, I completely agree. And just to put it in the context, the U.S. stock market started in 1792.
So
right?
Bitcoin is a lot younger.
Right. So the U.S. stock market is 230 years old. So it has had time to evolve. Yet Bitcoin, 13 years old, a teenager. This is why. And so as these markets mature, we will smooth out that price volatility. There'll be more historical data to predict the market, and people will get more comfortable. So it's a really good thing. But so, things are changing. As time passes, the volatility will smooth out.
And do you think the teenage mood swings of crypto are going to always be a part of the crypto market, or is volatility going to go away?
Volatility will go away. And I think one of the things we haven't gotten here yet, we're beginning, especially in the United States, we're beginning to see more crypto regulation. And with regulation comes comfort and confidence and clarity. And then our institutions come in. And then we will see the smooth and hopefully regular, predictable market that we're used to in the stock market and the bond market.
And Maggie, are there ways, if someone is interested in investing in crypto, feels they're financially able to take on that risk, are there ways to insulate themselves from that volatility? Are there certain coins or, ETFs that are more stable?
Sure, ETFs are definitely a more traditional investment vehicle, and since it's going to give you exposure to more than one type of currency or asset, it's definitely going to level out some of that volatility. In terms of picking a coin that is less volatile than others, it's hard to say because you could say go with a coin like Bitcoin that is much older, but Bitcoin has been one of the most volatile assets. In general, something that people should be looking for when they're looking to invest in crypto is what is the ecosystem and the number of applications real applications you can go use today being built on those blockchain networks. When blockchain networks and their associated cryptocurrencies are newer, they might not have as much usability, even though it's a good idea. So they're likely going to be more volatile, and they're going to have much less liquidity around them than something like Bitcoin or Ethereum. Ethereum you can look at as a lot of use cases. NFTs were created on Ethereum, and so we're seeing a lot of movement there. So those are the types of things you can be looking for. What is the ecosystem of applications that I could use today around it that's showing growth, and therefore the value of that currency should also be growing as well.
And Charlene, we talked a lot in this course about diversification of our stock portfolios. What does diversification in crypto mean?
So diversification in general means you're going to have a healthy mix to guard against rapid changes called price fluctuation. So when it comes to crypto, we expect you to have a mix of coins. And to what Maggie mentioned is that it's really important for you to look for those drivers of value. What does that mean? You're looking at the supply of the coin. You're looking at the developer community of the coin. You're really trying to understand the use case and whether or not that use case makes sense for the short term and the long term. Now, I mentioned that I'm a Bitcoin advocate, and so I encourage you to start with Bitcoin to really understand crypto and then branch out and compare other cryptocurrencies to Bitcoin, because it is the most stable and the most secure cryptocurrency.
And we ran through a lot of acronyms in the presentation. Charlene, I'm going to give you the hard task of skimming a few of them, explaining what they are and how they relate to crypto. So NFTs, Web3, and the metaverse.
Got it. So I'm going to try to do it all in one time. So NFTs are non-fungible tokens. These are digital collectibles that prove ownership. So we talked about, you've heard of CryptoKitties, you've heard of Bored Ape Yacht Club. Web3 and a metaverse. So this is really interesting. So Web3 and metaverse, it's a combination of virtual reality and augmented reality for an incredible immersive experience. So what's really great about Web3 is that this allows brands to really delight their customers. So you see brands like Disney and Nike creating Web3 worlds and selling NFTs inside those worlds. And you'll have an NFT for a sneaker, and then there's a real life product. So all of these pieces of the puzzle create an incredible experience to expand a brand and to connect with the community.
It's kind of like Inception, a little bit, the layers and the layers.
Exactly.
And Maggie, how does someone even invest in those types of assets? Can you go to the same exchanges that you mentioned?
Yes, you can. So Coinbase, which is a prominent exchange, offers cryptocurrencies and also now has an NFT platform, a non-fungible platform where you can find different NFTs with different use cases. Maybe it's art and collectibles that you can go and invest in. A lot of NFTs are also found on crypto native platforms like OpenSea. For that, you would need your own wallet and you'd need to get onto that exchange. But you can find them on a major exchange like Coinbase if you're just new to the space.
And do I need like a headset? How am I experiencing the metaverse? Like I'm picturing it like The Sims, and I think I need more gear or something.
So in some cases you do, like, Oculus has a great headset, but there's, what's interesting is that depending on what world we want to be in, you can use your phone to be a part of the metaverse, or you can have a headset. And to the point of investing, we know the metaverse is scheduled to be a $16 trillion market. So if you want to invest in the metaverse, you should be thinking of all those companies that are in that value chain. So blockchain companies, headset companies, software companies. You don't have to invest in crypto. You can invest in companies that are supporting the metaverse, and you really could have a robust portfolio.
Fun fact, I've DJ'd in the metaverse, and my friend had an Oculus on in the metaverse while I DJ'd there. It was in a metaverse called Crypto Voxels.
Wow. I think that question, what world do you want to be a part of, is so existential. I'm freaking out over here. I don't know. I do want to talk about scams. We talked about those in your presentation, Maggie. We've all seen the comments on Instagram that are like the weird bags of money and the dollar signs and crypto get rich quick scams. Those feel easy to spot. But do you have any other tips on how people can keep their eyes out on how to not get scammed in crypto?
Yes, as I mentioned, anyone can start a crypto project. Anybody can launch an NFT. There's no, vetting processes. And so that's where these fraudulent coins and scams can come into play. As you mentioned, no one is DMing you about free money. You didn't win an NFT from some random Instagram account. And no one that's in the crypto space is DMing you saying, how's the crypto market treating you? I bring this up because someone has impersonated my account and done that. So other things to know is to look at the team, use Google to research the team. Have they potentially been involved in any other crypto scams? Something else to look for is like, is it not listed on an exchange, right? So to get listed on an exchange like Coinbase, these coins do have to go through a process, a listing process. So if you're looking at a coin that you cannot find on Coinbase, Gemini, FTX, or Binance, really ask yourself if you should be holding or investing in that coin. Also look at things like, has the project been hacked? You know, you can do all this through Google, do a couple searches, try to get information on the coin, on the team, and, you know, see if there's actually a community around it. And certainly nobody is messaging you on Twitter, on Instagram, or any platform to give you something free. They're most likely trying to scam you.
Charlene, any other warning signs? I know you work with clients.
Yeah, I do. I used to run a room on Clubhouse where we talked about scams every week, and we had so many women came and they come. I think the first thing you want to say when you're doing crypto is make sure you're in a good mindset. You know, sometimes we can be vulnerable when we're going to use cryptocurrency, and there's so many instances of women being taken advantage of via romance scams. So we'll be on a dating site and we'll meet a guy and we're talking about crypto, and somehow they convince us that they're better at managing our money than we are. But we know that's not what we want. And so first thing I want to say is manage your mindset. The other thing that I always see, a lot of the women that I've spoken to, you know, they'd have investment professionals come to them and talk about these ridiculous guarantees of returns. 50%, double your money, triple your money. It's not normal. It's not reasonable in any market, especially in the crypto market. So you really want to say, does this make sense? Is this too good to be true? Because chances are it is. And so.
That's super interesting. Maggie, I want to pivot to the future of decentralized currency. Do you see digital currencies and assets becoming more regulated?
Yes, so these currencies will always be decentralized as they emerged outside of and exist on blockchain networks, which are run by a global network of computers. So they already exist on global infrastructure. So you'll always likely be able to send money from the United States to anywhere else in the world. And that way it'll stay decentralized. And yes, crypto will also become more regulated, which, as Charlene mentioned, this is good because it provides comfort. It allows for that institutional adoption as well. So I believe we'll see a mix of both. Some currencies like Bitcoin, I believe, will always be decentralized by the nature of its infrastructure and the way it works. Other currencies may fall under more scrutiny and regulations depending on how they operate and where their infrastructure is. Without getting too much into detail, we might see that more with Ethereum, Solana, NFTs. All of this, regulators will start commenting on. However, I do think that they'll always be decentralized in nature, as that's how they started, and they're at a critical point where that's hard to stop.
And Charlene, you're a former regulator. What would regulation in this space mean for crypto value and volatility?
I think regulation in this space is exactly what we need. So regulation brings comfort, clarity, and confidence. And when you have that, market smooth out and people begin to invest. We're in a great time. You know, if you look at this year alone, President Biden issued the executive order on cryptocurrency. Just last week, President Biden issued 9 reports that have recommendations on 6 different priorities around crypto: consumer confidence, illicit finance, national priorities. So the United States is really taking crypto seriously and doing what it needs to do to make sure that we have a framework that balances both innovation and consumer protection. And that's what we need for this market to really walk into its potential.
And could regulation also change how crypto is bought and sold?
Absolutely. I mean, there's lots of interesting bills that are talking about whether or not people should have certain types of wallets or other types of wallet. I think only time will tell. You know, I think I'm encouraged by the conversations that have been on the House and the Senate floor, and I'm encouraged that the private sector is very much involved in those conversations. So I am hopeful that there will be a balanced approach that we all can live with.
And Maggie, my last question for you before we get into some of our audience questions is around, if you are listening to this presentation and you do want to learn more, and a lot of crypto investment seems like it involves a lot of personal research and responsibility, as you mentioned, what are some key sources or places you'd recommend someone go to for legit crypto information that isn't their Instagram page?
Yes, legit crypto information. A good place to start is the exchanges. Coinbase has an amazing dictionary. Gemini has an amazing dictionary. Binance, and so on, where you can look up any word, so dictionary and glossary, and really start to understand the technical aspects, the financial aspects, what are nodes, what is all this stuff. Another great place to start is looking at some of the large VCs who've invested in the space. A16Z has what is called a crypto canon and also an NFT canon. So they've taken their favorite research and writings on the space and organized it for new readers. And also, if you're a woman interested in learning about crypto, follow SheFi in our outlets. And other great outlets are an organization called The Defiant, which reports on a lot of crypto things as well, also led by a woman.
All right, I know our audience has a ton of questions about what we talked about tonight, so I do want to get to some of those. Our first question is from Joe, who's wondering, is the crypto crash an opportunity or a warning? Charlene, what do you think?
Oh my goodness, this crypto crash is an opportunity. So, right now we're actually in a bear market, which of course the technical definition is a 20% drop of the S&P. But here's the thing, all risk assets are down. But what does that mean? That means everything is on sale. And we love a good sale. Last year, Bitcoin had an all-time high of $69,000 per coin. Right now, it's $29,000. So it's trading at a significant discount. This is your opportunity to take the time to understand crypto and decide if it makes sense for you. And one last thing, I was around during the financial crisis. And when all of those banks broke because of risky assets and bad decisions, we didn't say, should we stop banking? No, we didn't. We said, we want better banks. We want banks that are going to put the risk management structures in place, that are going to have the adequate capital reserves. I think this crypto crash is an example and an opportunity for these crypto companies to tighten up and become the resilient firms that they're destined to be.
Our next question is from Cassandra, who wants to know, how do I balance investing in stocks and crypto while also trying to save and invest in something like property?
Yes, so whether you're investing in stocks or crypto, a diversified portfolio is always recommended. So you should have a mix of stocks, you should have a mix of real estate, you should always be investing in your future self or your retirement, and you should also invest in crypto. Also, I mentioned you do not have to just choose one cryptocurrency. Even if you want to start with a few assets, maybe you choose a currency, an ETF, and an NFT or an NFT use case. Always, since it's a risky asset, keep that in mind. So maybe don't, put your savings for your property all into crypto. Only put about, 5% of your portfolio into something about crypto if you really want to play it safe, but still participate in some of the upside that might come from the crypto ecosystem.
Yeah, that 5% number is a good one to keep in mind.
Agreed.
We now have a question from Anita, who wants to know, how can I invest directly into crypto through an existing investment account, like a 401k or an IRA? And is that even advisable?
I'll take this one. So I get this question a lot from many of my clients, but the first thing I ask them is that, are you ready? When you're talking about investing 401k assets, we're not talking about $100 in Bitcoin or $100 in Ethereum. We're talking about a significant amount of money. And so you want to make sure that you have an emergency fund, you have a budget, and most importantly, that you really understand what you're investing in. Now, it may or may not make sense for you, but that answer to that question is very much customer or person specific, and you want to be very thoughtful and proceed with caution.
Yeah. Grace is wondering if there are any environmentally friendly crypto options, and how does that even work? Maggie?
Yes, I'll take that. So you may be thinking about Bitcoin, which uses a consensus mechanism to validate transactions called proof of work. So it needs a lot of computers and a lot of computing power and a lot of electricity to validate the network. So that's where the environmental concerns come in. Ethereum and most of the other blockchain networks are now what is called proof of stake networks. So to validate those networks, you need to stake crypto. They are far more environmentally friendly. They basically cut the energy consumption 99.5%. So you can look up cryptocurrencies that are proof of stake currencies, and you can trust that they are good for the environment.
And we have a question from Trish, who's wondering, other than SheFi, what online communities and resources are female-friendly for learning about crypto? Crypto still feels like a bit of a boys' club.
There are lots of great communities. One community really focused on investing and investing beyond crypto is Eve Wealth, EVE Wealth. Funnily enough, another great crypto organization that throws a lot of events is called Boys Club. They are a new social club, a no-bro zone for the crypto curious. There's another organization called Crypto Besties, which is a decentralized autonomous organization, or a DAO, that's essentially having women learn about crypto through joint ownership of a makeup brand that they are making together. The Crypto Besties founder was a part of SheFi. And finally, there is My BFF that was started by Jamie Schmidt and Britt Morin and has a lot of star power behind it. I think Gwyneth Paltrow was on their first Zoom. They do a lot of great stuff in the NFT space, and is another great place to learn. Eve Wealth, Boys Club, Crypto Besties, and My BFF.
Yeah,
There's
Charlene,
also
anything else? Yeah.
Crypto Connect. So, what we haven't talked about here is maybe you want to work in the cryptocurrency industry. We talked about investing, but how do you get a job in crypto? I'm a part of a great networking organization for women called Crypto Connect. And so what we do is we have chapters all around the country, and we help encourage women to decide if they want to be a part of the community. At Guidefi, I specifically teach women about Bitcoin and cryptocurrency, so that's really good. And, I would just say, honestly, you might need a women's community, but you might not, right? I want to encourage every woman that is watching this. This world is your oyster, so take it. Absolutely take it. The time is now. There's not a better time for any woman to be a part of crypto, whether you're investing, whether you're owning, whether you're building a business. Let's not forget about that. Incredible opportunities. And so I just want to encourage you, please don't feel like that there's no place, because there's an absolutely place for you in this ecosystem.
Yeah, and if we have to make a no bro zone poster, we'll do it. Avery wants to know, do capital gains taxes, okay, this is a taxes question, do capital gains taxes work the same way with crypto as they do for other investments? I'll do this as a toss-up because it's a tax question.
They do.
Yeah.
They do. Yeah, the crypto is taxed as property. So again, if you're purchasing or you're selling, you're going to pay taxes, and it's so important. So because we know that, it's so important for you to be tracking your taxes. The good news is that most reputable exchanges, they already track your tax activity anyway. So at the end of the year, just download your activity and make sure that you are filling it out appropriately in your tax documents.
Okay, good to know. Kind of like if you own stocks, basically the same.
Exactly.
Yeah.
If you sell, same deal.
Yeah. Our next question is from Parker, who's wondering about how NFTs are valued. Maggie, is the fluctuation similar to the stock market for these assets?
So cryptocurrencies, we mentioned, have less liquidity than the stock market. NFTs, unfortunately, have less liquidity than cryptocurrencies because each individual NFT is one of a kind and so has an individual value. And these collections tend to be digitally scarce. So maybe the most an NFT collection has is about 8,000 NFTs in that collection. A lot of them are smaller, like 50 NFTs in that collection. So when something is of unique value, like art, it's hard to have a super liquid market around it because how do you value that individual unique NFT against a different individual unique NFT? A lot of them are valued with, depending on who is behind them. Right? If a famous artist is behind a major NFT drop, it's likely that that NFT is going to have higher value than maybe just somebody who just decided to create a collectible for the first time in a big collection. Really, the community is a big driver of this and the value NFTs give to that community. NFTs are common ways for people with similar interests to buy something, to show that interest, and then come together in a community and start building things together. If the NFT provides other perks, maybe such as education or swag or access to cool social clubs, something like that, it also could change the value. So with each NFT, try to understand what beyond that digital collectible is the NFT giving me, what's the community around it, what's the star power behind it, and why might it have value, just like any other piece of art, collectible, or individual unique item might have value.
We have another question, and this skimmer is wondering, if I want to start very, very small with crypto investments, what's the first place you would consider for investing, Charlene?
I would start you off with Bitcoin. I mean, Bitcoin was the first cryptocurrency, and it's a great foundational cryptocurrency. I always encourage my clients, understand the properties, understand the history, and if you choose to branch out, at least you'll be able to compare other cryptocurrencies to Bitcoin. And then what's so interesting, and we haven't said this, but it goes without saying, you don't need to buy a whole Bitcoin or a whole piece of Ethereum. You can buy a slice. That's really, really important. You can invest $10 and get the same appreciation that you would get if you bought an entire coin. That's really important. That means everybody has full access to really gain that wonderful appreciation that we hope will occur in this market.
So you could just put $10 in, buy, I think, a very small piece of a Bitcoin, and then watch how it goes.
Exactly.
Okay, good advice. Our next question is from Becca. I love this question. Maggie, can you use credit cards to purchase crypto, or do you need to have cash?
Yes, you can use credit cards to purchase crypto. Once again, go to a major exchange. You can put in your bank account information or your credit card information, and you can purchase cryptocurrencies. And really what Charlene said was important. You can buy $10 worth of Bitcoin, $100. With stocks, you have to buy the full price of that individual stock. So it can be hard to buy Apple or Tesla when it's at $300. But it doesn't matter what price the coin is at. You can buy a part of it with how much money that you're comfortable in investing.
Can I just jump in? The banker in me is struggling. So please don't use debt to buy crypto, ever. It's tough. Like, here's the thing, we want to, when you're moving into investing in crypto, you want to make sure that you are financially stable. If you can only use credit, it might not be the right time, and that's okay. Don't feel pressure. So, I get a little bit concerned when people want to use credit cards, because here's the thing, if that money is gone, then you don't necessarily have the cash to replace it. So that's very, very risky, and the market will be there when you're ready. So please, please, please heed that.
Great advice. This audience member wants to know, how do you choose which crypto exchange to go to? Maggie, any advice?
Sure. So once again, as I mentioned, really there's major exchanges that are regulated financial entities in the United States. So that's a great place to start. Coinbase is also a public company, which means they have to publish everything about their financial standings, their business. So you can actually go look that up today. So how you choose is really, there's a number of factors. The most important is understanding how they store crypto, right? They're going to custody the crypto for you, and also what their security practices are as well. Do not choose an exchange that, you haven't really heard of. It's not regulated by every government. It maybe just has a mobile app. Those are all like clear red flags that exchange could go under and could just disappear. You're not going to have that problem with exchanges in the United States. Sometimes they offer different fees on trades or purchases, which you can take into consideration to narrow down your choice. But you really can't go wrong between Coinbase, Gemini, Binance, and FTX.
Yeah. And our last question tonight is from Danny, who wants to know, what new cryptocurrencies or projects are you excited about? I'll let you both answer that one.
I'm excited about the Bitcoin Lightning Network. So that is layer 2. That allows fast, efficient payments. A lot of people say that Bitcoin isn't scalable, but the Bitcoin Lightning Network allows, roughly 1 million transactions per second. And so I'm excited about all the amazing things that are being built on that network. That's what I'm excited about.
Yeah. Maggie, what about you?
Sure. There's a number of projects that I'm excited about. I really love thinking about them in terms of ecosystems. So the Ethereum ecosystem has NFTs, decentralized finance, and metaverse projects. All of those projects have their own NFTs or tokens. So you can really look at use cases. Solana is very similar. Another ecosystem that's really up and coming as well is Cosmos. But really just think about it more in terms of like what use cases are really exciting you. I really like NFTs. I really like this new organization called Decentralized Autonomous Organizations. And of course, I teach a lot of DeFi in my SheFi course. So I'm really passionate about open permissionless finance enabled by Ethereum.
DeFi and the SheFi. I need the dictionary again. Maggie and Charlene, thank you both so much. Tell us, how can our audience keep up with you?
Great. You can find me on Twitter at Fadirepo. You can find me on Instagram at Charlene Fadirepo. You can follow Guidefi on Instagram at Guidefi. And also, I have an awesome newsletter on Twitter. It's free. It's lots of great information. And we focus on do-it-yourself investors. And I'd love to have you join my newsletter list so I can share additional information with you. Thanks so much.
Yeah. And Maggie, where can they find you?
Sure. On Twitter, you can find me at Maggie Love _. On Instagram, you can find me at love.maggie_. You can find SheFi at Twitter. Remember, she __FI. on Instagram, shefi.crypto. And on both of these platforms, we basically exclusively focus on education and breaking down all these concepts. And then you can also find SheFi at www.shefi.org.
Great. Thank you all so much for joining us tonight for our final course of this semester of SkimmU Money presented by Fidelity. To watch all of this year's courses, head to theskim.com. See you next year.
Girl, I'm about to have a panic attack. I did the work, it didn't work. That truth, it hurts. That damn, it hurts. That lovey-dovey shit was not a fan of